room and text alert service. First thing I've got to do, of course, is go over the disclaimer here. All signals and trading opportunities we provide here and talk about are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving any financial advice. All right, well, we'll move ahead here. Now, if you have any questions, I'm going to keep the question box up, so if anybody has any questions during the webinar, I'll try to answer them. If they're on a basis of something we're talking about. If it's something disassociated with what I'm talking about, I'll just answer them at the end. But if you have any questions and you want to get some questions answered that I haven't answered, I can't answer, just go ahead and put your name and phone number in the chat box or the question box, or your Skype username. And Rory from Right Line, he'll give you a call one time. He won't be pestering you, but he'll call to answer any questions that I can't answer. All right, so we'll get started here. Again, this is just kind of a graphic on the SPY super system. What we do is we track institutional money flow, so we can be trading with the institutions. That's the most important thing. That's how you make money in this market as a retail trader, is to know when the institutions are in the trade and when they're not. And when they're in the trade, we'll trade, and when they're not, we won't. Okay, and this is just a graphic of the alert service that I have called basically the Compass Alert Service. Comes up on your phone, and I'll go over that during the presentation as to all of the information that you get from these alerts when they come out. So first thing I want to talk about, and I always talk about this first, so we can understand what moves the market. This is just kind of a graphic representation of retail traders. We're all these little marbles here, and there's millions of retail traders. And the important thing to understand is all the retail traders, we can't move the market. All of our trading, we have no impact on market trend at all. So if we're in here and these are the institutions, this big marble. If we're in the trade and the institutions are not in the trade, then you've got nothing but chaos and chop. When the market's just chopping around, you don't have any coordinated trading, buying or selling by the institutions. Now, these are retail traders such as myself, and I assume everybody else is here. This is the institutions. Institutions are I think everybody knows, investment banks, Goldman Sachs, JP Morgan, Morgan Stanley, all the big banks. But there's also lots of other institutional trades that take place in hedge funds. There's hundreds and hundreds of hedge funds with billions of dollars to invest. Pension funds are huge. Lots of billions and billions of dollars for pension funds. And then you have all your mutual funds. Vanguard, T. Rowe Price, billions and billions of dollars. And these are the entities that actually move the market. And our job as retail traders is to try to identify when the institutional traders are in the trade or when they're driving the trend and take advantage of it. So that's what we're going to look for. And I just wanted to show you just a graphic presentation, representation before I start. This is actually a charting program I use called TC2000. The Compass system I will show you I run on Thinkorswim. But I just wanted to show you the difference. These are regular candles on the SPY. This is a little old. I'm not sure when this took place, but it was back in February. But these are standard candles that everybody is familiar with. And I have some indicators on here. Moving averages, 100 moving average, 50 moving average, the 15 and the 8. But these are standard candles. This is what Heiken-Ashi candles look like right here. These are Heiken-Ashi candles. And you notice that Heiken-Ashi candles, and we'll get into this in more depth. You see when it's in an uptrend, you see how the candle bottoms are all flat. And when you're going down, the candle tops are all flat. That's what indicates a trend to the upside and to the downside. Now, when you're getting wicks and tails, you don't really have a trend, but the trend can develop from that. So if you just notice a difference here, you see flat bottom, flat bottom, flat bottom, all the way up here. This is a trend, and this is when a trend is stopping right here. You can see you're starting to get some reversals, and then you go back into a trend again. All right, so we'll go over how we can use these candles to improve our trading here. All right, so in the room, and this also applies to my alert service, I have some rules that we follow. Pretty simple rules, actually. First rule is we trade the best and skip the rest. Easier said than done, but that's what we're aiming for, is to only trade the very best trades that we can find. We're not taking trades just to take trades, and that's the other thing. Our objective is not to make trades. Our objective is to make money. We make money by taking trades, but only the very best trades. So the reason I point this out is a lot of people don't have the patience, or a lot of traders don't have the patience to sit and watch the market and not take trade if there isn't a good trading environment. Today was a terrible trading environment. We had a gap up this morning, and then the market basically just chopped around the rest of the day. So most all the gains occurred on the open this morning. And the rest of the day was very choppy as far as the market's concerned. If you don't have the market going in a direction, then it's much more difficult to find high probability trades, because of course the element of the market trend is missing. So those are the rules that we trade by in the room, and these impact these trades that come out to the alert service. All right, so as profitable traders, and I've been doing this for full time for 14 years as basically a day trader and a short-term swing trader. I'm not a scalper, but I do some intraday trades. But we need an edge over the other retail traders, because remember, we take our money from other retail traders. We're not taking any money from the institutions. You're not gonna beat the institutions no matter what you read or hear about. It's not gonna happen. The institutions are the elephants in the room. They can push the market any way they want, and our job is to have the tools to be better traders than the other retail traders and take the money from them. All right, so our edges are that we have here in the room. I use it called the right line compass system, and I'll show you this. This is a method. This is a system or a piece of software that I run on Thinkorswim that shows me when the institutions are in the trade and when they're not. And it's extremely helpful. We also trade relative strength and relative weakness. Now, this is not RSI, as you might understand it. This is relative strength versus the SPY. In other words, if you've got a stock and then it's moving up, and the SPY is moving sideways or down, then that stock has relative strength, and vice versa on relative weakness. This gives you an important edge, because in this particular case, if you're in a stock and the market reverses, heads back down, and you're long the stock, your stock is not going to drop as quickly as it would because of the fact that it's stronger than the market, so it'll hold up better. Gives you time to get out, or even stay in the trade if it stays with relative strength. So that's an important one. Another one is to trade with the market trend, just if there is a market trend. And if the market is trending up, we look for bullish trades. Trending down, we look for bearish trades. Pretty simple. When you get a choppy day like this today, we have to really dig deep into technical analysis on our stocks and find only the very best trades to take. And sometimes it just isn't any really good trades to take. And the last one here is I talk about is buying at support, or buying near support and selling near resistance. I mean, this is really important. This keeps you from jumping into a trade first thing in the morning. This morning is a really good example. We had a big gap up this morning to a new all-time high in the SPY. Traders get all excited. They want to jump on this. They want to jump on this train, and in their minds they're thinking basically fear of missing out. I'm missing this run. I got to get on this train now. I'm going to miss this big run on the upside, and then it pops up for a few candles, and then you're in. And as soon as you get in, it turns around and it starts to chop around sideways, pull back down again, and now you're trapped in the trade. And then you're trying to decide whether you should just take losses or whether you should hold it or what you should do. If you had just waited until the market stabilized and the stock pulled back to a support level, which they almost always do, and then entered it on a bounce off of there, then you would be a lot better off in that trade. You're getting in a much better price. You're not going to be suffering from all this anxiety because the stock's going against you real quickly. So that's why buying near support and selling near resistance is so very important. All right, and now the compass system I'm going to talk about briefly here. This is just a graphic representation of my Thinkorswim platform, and I'll show you this. But the compass system identifies the highest probability trade setups while sidestepping setups that look good but will fail more often than they succeed. And this is because the compass system identifies institutional involvement in the trade. It does, again, it identifies when institutions are driving the move and when they're not. The Compass system analyzes complex trading data and displays the results in an easy identifiable visual format. And I'll go over this with you and show you. But this is really important because for somebody who's fairly new or hasn't done a lot of technical analysis on stocks, the fact that the Compass system makes this so easy to visualize when a stock is bullish and when it's bearish and when the institutions are in there and when they're not, it makes it much, much easier to find some high probability trades if you're not a seasoned trader yet. That's one of the things I like about it the best, is you can bring somebody on board and they can learn to find high probability trades very, very quickly. All right, so again, we got to get an edge over other retail trades, and this is really important. Again, we're only taking trades being driven by institutions. We're trading stocks with relative strength and relative weakness versus the SPY or the Q, and we trade in the direction of the overall market. Sounds pretty basic, but I mentioned this thing multiple times because this is really important. I mean, it's really important to make sure these three things are in place when you take a trade. And again, so how does this give us an edge? Well, our trades are going to be supported by institutional buying and selling. The institutions are going to be in there buying or selling. If we're short, they're going to be selling. If we're long, they're going to be buying. The stocks are going to be outperforming the SPY. So that's another edge for us. And the stocks are going to be moving in the direction of the overall market if there is a trend in the market. That gives you another edge. And basically finding high probability trades and trading successfully is basically having a list of criteria that are like check boxes that you need to check for any trade that you're going to take. And the more that are checked, the more likely it is that trade is going to be successful. Okay, and again, this is basically what I call a high probability trade funnel, setup funnel. And I have a video on this in my room. You have access to about 25 videos. But one of the things I talk about is a trade funnel. And so I talk about what you look at to start with, and then run all of these criteria through the stock. So if you're looking at a stock and you're going to go long, for example, the daily chart and the 5-minute chart both need to be bullish. It's not a good idea to go into a long trade if you've got a nice 5-minute chart that's bullish, but your daily chart is not bullish, it's bearish. If the daily chart is bearish, you do not want to be trading it long. And the reason for this is if you get into the trade and the daily chart is bearish and the stock starts to go against you, you don't have any options to stay in the trade. Because you can't take it overnight because the overall chart, the daily chart, is bearish. So the likelihood is the stock's going to go down the next day. So you just can't stay in it. And you can't even stay in it during the day when it goes against you. Compare that to a stock that you've taken, which has a really nice daily chart that's bullish and a nice 5-minute chart that's bullish, and you get into it and it moves up and then it starts to move against you. You don't have the stress of deciding whether you're going to stay in the trade. Since you've got a really bullish daily chart, you can just stay, as long as it holds support on the daily chart, you can stay in that all day and then hold it overnight. Gives you a much more likelihood of being successful. It may take a couple of days, but you're not forced out of the trade at a loss because they didn't align. So I spent a lot of time on that. It's really important. I never take a trade long that doesn't have a bullish daily chart. And again, you want to trade the trend with both the stock and the market. So again, if the market's going up and your stock is going up and it's got a good daily chart, then that's two really key elements. Now, if the market's not trending, you've kept it, eliminate the market trend portion of this, but you'll still be good enough trades to take if you can find really good ones. Then we have to look at the compass indicators, and the compass indicators will tell us whether there's institutions in there or not. They must be in the trade. I must have, my compass system must tell me that the institutions are in buying if I'm going long and selling if I'm going short. Very important. And then relative strength and relative weakness. Does the stock I'm going long, does it have relative weakness, relative strength of the SPY? If it does, that's another checkbox. Are we near support or resistance? If we're near support and it's bouncing off support, then I can get into the trade. If we're not, if we're extended from support, then I can just set an alert at the support level I want, and when the stock pulls back to that level, then I'll be alerted, and then I can look to get into the trade. But so this is basically a simple simple funnel. If you take a stock you're looking at, you look at Microsoft, you drop it through. Does it meet this? Yes. Does it meet this? Does it meet this? Does it meet this? Does it meet this? The ones that come out the bottom are the very high probability trade setups. And then you dig into some additional technical analysis on it. All right, so again, that's the funnel method. Here it is, kind of just identified. I won't spend a lot of time in this. We just went over it, but the key thing here is you got to identify the market trend. If there is one, stocks traded must have a daily and 5-minute chart aligned. Need to both be bullish for longs, both be bearish for shorts. The compass indicators must align in the direction of the trade. And then a relative strength, relative weakness. On the 5-minute chart, you want to be making a trade long only when the stock price is above the VWAP. If you're familiar with the VWAP, the volume weighted average price. So you would have the stock prices above the VWAP on the 5-minute chart for long and below the VWAP for short. You don't want to be going long a stock that's below the VWAP on the 5-minute chart. You want to wait for it to get above that VWAP and then enter there. The VWAP is actually a good support resistance level that you can use on the 5-minute chart for your entry. And the other thing you look for is on your daily chart when you're going to enter a trade, make sure there's no nearby support or resistance that's going to limit your profit target. In other words, if you're in a stock and you want to go long and it's only 25 cents from there to the 200-day moving average on the daily chart, you don't want to take it. You don't have enough upside potential to be in that particular trade. And the last thing, and I emphasize this in the room every day, you have to have patience. I mean, I didn't take any standard trades today. I mean, I watched the market gap up and just do nothing. And it's if you take a trade, you're really kind of wasting your time. It might work, it might not work, but the likelihood of it working is way less than it normally would be. So you have to have patience and just wait. That's one of the hardest things for most traders to do, which is to sit there in front of the machine, thinking they're a trader and think that I got to take a trade. So they'll find a trade. This looks okay, and take it. And you can drain away so much small amounts of money on all those little trades, and it'll wipe out a lot of the big nice trades you had in the past. All right, so inside the trading room and my alert service, these are the particular strategies that we use, that we take. We take straight calls and puts, obviously. We do debit spreads using weekly options expiration. The debit spreads I use will expire this week. We just had one on NVIDIA yesterday, worked beautifully. But I use weekly options expiration. I've found over time by looking at my trade log that the debit spreads using weekly expirations have a much better ROI than going out 2, 3, 4 weeks into the future. I do what's called time spreads or calendar spreads over earnings to catch to capture the volatility crush. And this is important. On earnings, this is the only trading I do on earnings because you don't know when earnings come out. You don't know whether it's going to go up, it's going to go down. The market makers have no idea, and they don't know how much it's going to go up or how much it's going to go down. So what they do is they increase the premiums on the options to cover themselves because they don't know which way the stock's going to go and they don't know how far it's going to go. So they really put in a fairly aggressive pricing on the options. That's called volatility. They put what's called the volatility in there. And the way that the time spreads work is when the earnings come out in the next morning, for example, then once the market makers know which direction the stock's going in and how much it's to trade, how much it's gone up or gone down, the volatility comes out of those premiums. In other words, they reduce the premium by the amount of volatility that they're reducing. It's called volatility crush. And if you're selling this week's call and buying next week's call, like we do for a time spread, that reduction in volatility, you can end up buying back the call that you sold much cheaper. So that's how we make money on that. We're basically just capturing the volatility crush. I also have a strategy called a weekly ATM strategy. This is a strategy where we sell puts against a longer dated put. We could have a put that's for 95, for example, out in May, and we sell weekly puts against that, like 97 or 98 puts against it, week after week after week, and we bring in premium week after week after week. And the reason for this, the way we do this, is we're basically just capturing time decay every week on a stock that is a neutral to bullish. We want a neutral to bullish strategy on this particular strategy, and it works really, really nicely. We also do regular credit spreads to capture premium over a few weeks. We just finished a credit spread on Wayfair the other day. We had one in Goldman Sachs a couple of weeks ago, and these are very nice. They're easy trades. There's very kind of low stress because you don't have to watch them all the time. It's just a matter of having the right stock and have it structured correctly. But we do a lot of credit spreads. And then I have the thing called the SPY Super System, which we haven't done much of these lately. It's one where we call them out in the room, but we don't send alerts out on them because a lot of times they only work for like 3 or 4 candles. And what you do is you buy SPY puts or SPY calls, a Q puts, a Q calls, and we do this when we have a high probability based on the compass system telling us the institutions are in there buying or selling, and also market internals, which I also have a piece of software to identify market internals, are also in our favor. And that's the only time we take those. Okay, so those are the strategies that we use. Now, I want to briefly cover the alert service and who it's for. Obviously, it's designed for day trades and short-term swing trades. This is not an investment service. I don't recommend stocks, to hold for the next 6 months, a year, 2 years, 3 years. I don't do any of that. Most of these trades are going to be intraday or overnight and out to sometimes 2 weeks. I think we just took a profit on a trade that we actually had for 2.5 weeks, which was a pretty good long time. But it was a nice profit. We took about 60% on it, so that was good. Again, it's designed for traders who can't watch the market all day. Obviously, a lot of people either can't or don't want to, so we send out alerts to your phone, and you're going to get alerts on the highest probability trade setups. The trades that we look at the room, if I take a trade and it's not going to be like a SPY Super System or something that's going to be over in the next 20 minutes, alerts will go out on that. And you get the alerts inside of a minute or so. I keep them on my phone so I can tell how fast the alerts are coming, but they're very, very timely. And again, the highest probability trade setups that we're sending out alerts on, we do this by identifying institutional involvement, market internals, and I dive into some more deep and technical analysis to find the very best trades to take. All right, this is just a cumulative P&L over the last 90 days. This is last fall, I think. It basically just shows you the bottom left, up right. This is the kind of profit graph you want, and we've been doing very, very well. And I'll kind of go over some of these things. This I just put up, and this was to kind of show you the win rates. And I'm going to go into some specific trades on specific months so you can see exactly what we've done. But this was, if you invested $2,000 in each trade, this is back from March through June 23rd. We had in March 37 wins, 6 losses, 86% win rate. This is normal. Our normal win rate is between 85 and about 92%. And this was the profit based on $2,000 put in each trade. And you see the profits can vary. Even though the win rate's higher, the profit was lower. And a lot of that has to do with the market. I mean, when you're trading a choppy market, you're not going to get as much profit as you do when you're trading a trending market. Trending markets, you can stay in the trade longer. So that helps a lot. You don't have to get out so quickly. But that's you can see the win rates are about the same. This was 35 wins, 5 losses, 41, 6 losses, 37, 6 losses. Some months we pare back the number of trades quite a bit. But I just kind of want to show you that. But I'm going to get into some specifics here in a second. All right, so these, I'm going to go through this fall. These are the last September trades that we took. And the reason I like to show this is a couple things. Obviously, it shows the win rate, etc. But it's going to show you what kind of percentage gain you can expect on a trade. I mean, I get the same emails you get, the same videos, people telling you that you can get trades 400, 500, 600%. Time after time after time, and it's not true. You can get them, but you're going to have a lot of losers, and you're not going to be able to make a profitable strategy out of it. Typically, what we shoot for is somewhere between 20 and 40, 50%. And sometimes we only get 5. Sometimes we get 108. That was a good one. But we don't get that high very often. Most of the time, it stays in the 30s and 40s, and we have losers. You need to be aware that there are losing trades. But what really matters is where are you at the end of the month? That's the important thing. In September, we had the 25 wins and 2 losses, 92% win rate, 77.88. And I did mention here that the trading results were outstanding because the market was really tough to trade in September. All right, this was our October trades. Again, same, you can see pretty much the same percentages here. 33, 23, we had 3 losses. It was actually 4. Baidu for 20%, 29% for RTX. So you can see that 61%, this was a pretty nice one in JD, 43% on Restoration Hardware. But all in all, we had 24 wins and 4 losses, 86% win rate, 44.80 profits if you put 2,000 in each trade. November, we had 21 wins and 4 losses, 84% win rate, a little bit lower win rate, but a little bit higher profit. And again, it's because of the market more than anything else. But again, you can see the percentages pretty much stay around the same. We had a tiny little loss in Roblex, but you know, 30%, 20%, 30%, 30%, you know, lots and lots of 30 and 40% trades, profits in these things. And some of these lasted a day, some of them lasted 2 weeks. And this was December, very few trades in December. Slow month, choppy market, holidays all over the place, a lot of traders away. So we didn't trade much. We did 14 wins and 2 losses, a nice little 87.5% win rate, 3,115 profits, but that's pretty good on 16 trades. And again, percentages, 36 on McDonald's, 63 on Microsoft, 30% on VKTX, another 31% on Microsoft, and a couple of losers in there. So that was our December trades. And then we kicked over to 2024. This was our January results. Again, we had 20 wins and 2 losses. That's a 90% win rate. January was pretty nice here, $7,505 profit on those trades. And again, notice the percentages staying around the same. This was a time spread. This was a debit spread. This was a credit spread. We have all different trades, but you notice a lot of them hanging between 20 and 40%. And 43 at Zim, that was pretty nice as well. Mara was 65, pretty nice as well. February, this was a really good month for us last month. We had 24 wins and 2 losses. That's a 92% win rate. 2,000 invested in each trade, netted $11,745. This was pretty good inside the room. Now I did break out the alerted trades because I wanted to break out the difference, because some of the trades I can't send out on alerts because they're too fast. So there's some trades we take in the room that don't go out in alerts. But if you looked at the alert service, we had 20 wins and 2 losses. So that's about a 90% win rate, and $2,000 invested off of the trades that came out in the alert service was $6,930 profit. So that was pretty good. And again, you can see the percentages. 40% Bristol Myers was a break even on UNP, 57 on PayPal, 32 on Meta as a debit spread, another debit spread over here, a couple of time spreads. So quite a variation, and we have to decide, or I have to decide which strategy you use depending on the market and the particular stock. All right, so and I'm going to show some of these are alerted trades. I will tell you from March so far, I haven't broken it down yet, but we're 14 and 2, 14 wins and 2 losses. So that's about an 87% win rate. And in the room right now, for trades we've taken, and on the alert service as well, because they're all in the alert service so far this month, we're up about $4,500 on those 16 trades. Most of the time, you won't have more than 3 or 4 trades on at the same time that'll stay out there. So it's not like you have to manage 15 trades. It's a small number. So these are trades that we did on the alert service. I just kind of want to show you that some of them were overnight, some of them were intradays. This was an overnight trade here, in at 690 out at $8. So you did $330 profit on just this overnight trade for crowd. And STX here, we were 2 days in this one. This was Amazon, in for 315, out for 415 in 2 hours. So that's a 32% profit just in 2 hours. So this just kind of shows the trades that we've taken recently on the alert service, and I'll show you how they're going to be notified of that. But again, it's 43%, 40 or 38%, 50%. You can see that it's the same kind of percentages that I've showed you on the other charts, on the other spreadsheets. Here's some more recent ones. Workday, this was in for 1170, up 1470. 2 days, we were in 2 days on that one, 26% profit. So that's the kind of the these are the trades that you're going to see on your alerts, and this is the percentages you're likely to expect. Obviously, there's no guarantees in any of this, but I've been doing this for 2 years and 3 months, and we've had 2 small losing months, and every other month was a winning month. All right, so yeah, this is just an overview of the 2023. This was the trading results for 2023 using 2,000 per trade. The profit was 60,000, a little over $60,000. That would be if you use an account of 50,000. Each trade represented 4% of the count at the beginning of the year and dropped down to less than 2% at the end of the year. We grew your account by 120% on the original 50,000 to over 110,000 at the end of the year. So that's kind of the results that we get here in the trading room. Okay, so this is the information that you will get on the alerts when they come to you on your phone. You're going to get, obviously, you're going to get the stock symbol, the option strike price, the option expiration date, and the price to pay for the option. And that may be a range. It may say $1 to $1.05 or something like that. But this is all going to come to you on your phone. Usually, I'll send out one alert when I enter the trade and another alert when we're getting prepared to take profits, or once we decide where we want to exit. And if you get one for the exit, it's always best to put good till canceled on the trade when you put it on your platform, so that it's working in the morning when the market opens. All right, and again, how do we achieve these stunning results? And these are stunning results. I mean, 90% win rates are very, very difficult to do. We were able to identify when institutions are driving a trade and when the market internals are heavily bullish, so we only take those trades. And that's how we find the very highest probability trade setups to send out in the room. All right, so I'm going to go here. I want to briefly talk about the Compass system and how we find these institutional trades, so you know when you get an alert how we're finding these. And then we're going to go into the Heiken-Ashi candlesticks. We do, in the Compass system, we do what's called a triple screen assessment. That's a fancy way of saying, some people call them fractals. That's a multi-time frame that we look for. And we look at 3 different things. We look at momentum, we look at trend, and we look at money flow. And we look at all 3 of these across multiple time frames. If you've got momentum going up on multiple time frames, trend going up on multiple time frames, money flow going up on multiple time frames, the likelihood that trade is not being driven by institutions is very low. It's very, very high probability, 95, 97% that the institutions are driving that right then. And that's what we want to know. All right, so this is, I'm going to go into the Heiken-Ashi candles here now, and I want to this is kind of a chart of Tesla, and I want to show you, this is the Compass system. This is on Thinkorswim. This is what the Compass system looks like. These are our indicators. This is a multi-time frame trend. This is the current multi-time frame momentum. This is the current time frame momentum, and this is the this is a type of money flow indicator here. And all green, it's green and blue is bullish, red and yellow are bearish. You'll see some of those as we go through. But this is what we look for. This is a 5-minute chart of Tesla. This is actually a trade we took, and you can see these are Heiken-Ashi candles. You see the flat bottoms. You see how it went from a wick and a tail to a flat bottom. We're going to talk about that. That's a Heiken-Ashi reversal. Heiken-Ashi reversal with a wick and a tail to a flat bottom. And then as long as it stays flat bottoms like this, it's in the uptrend, you stay in the trade. And then you start getting wicks and tails, you take profits. So quite a big difference here in the structure of these candles versus the regular candles. And these Heiken-Ashi candles tend to take out the noise a little bit. All right, so let's talk about Heiken-Ashi candles. What is the advantages over standard candles? Well, first of all, it identifies confirmation of a trend reversal. If you're trying to get into a trade and you're waiting to get in at a support level and it bounces off the support level, if you're watching regular candles, it's much more difficult to identify that reversal and have it confirmed than with a Heiken-Ashi candle. Heiken-Ashi candle will show you the confirmation of the reversal very easily, and I'll show you that. Again, it allows trade entries on a confirmed reversal, avoiding failed breakouts. How many times have you got into a trade that looked like it was breaking out and it was a failed breakout, turned around and headed right back down again. And the likelihood is if you were using Heiken-Ashi candles, you wouldn't have got caught in that reversal. I mean, you always still can, but it's way less likely that you're going to get caught in a reversal on a failed breakout if you're using a Heiken-Ashi candle. It smooths out the price mover to eliminate noise, as I just showed you on that Tesla chart. It allows this trader to stay in the trend trades longer, avoiding shakeouts. In other words, if you're following the Heiken-Ashi candles, the noise that the regular candles are producing, the chopping up and down, is going to be smoothed out, and it's not going to freak you out and have you out of a trade when you look back at it and wish you had stayed in. And identifies waning trends so you can exit for profits. Makes it much easier to visualize the current trend. And I think you saw that on the Tesla thing, but I'm going to show you quite a few more of those. Now, let me explain what they are, what Heiken-Ashi candles are. If you've not used them before, first of all, you might want to try using these to improve your technical analysis. It's really pretty simple to do. You can, any platform you can convert your candlesticks to Heiken-Ashi candles very quickly. And what it means is average bar in Japanese. It basically takes 2 bars to create a Heiken-Ashi bar. And it smooths out the price action, so identifying the trends and reversals is clearer and eliminates the noise and makes it easier to see trends and stay in the trade. That's what we just talked about. That's what Heiken-Ashi candles do. Now, bullish Heiken-Ashi candles, as we mentioned, have flat bottoms. Bearish Heiken-Ashi candles have flat tops. So if you're in a bullish trend, all the candles are going to have flat bottoms. If you're in a bearish trend, they're all going to have flat tops. The bullish trends, we're going to have flat bottoms, Heiken-Ashi, one after another, and bearish trends will have flat top Heiken-Ashi candles, one after another. In other words, stacked candles. And again, generally, you can stay with a bullish trend as long as there is no flat top Heiken-Ashi candles appear, indicating a lull or reversal. In other words, if you've got flat bottom candles and then you get a flat top candle, that's likely the beginning of a reversal because that's now becomes a bearish candle. All right, and I'll show you this in a minute in a graphic. Reversals in a bullish trend will have flat bottom Heiken-Ashi candles followed by a smaller doji Heiken-Ashi candles having both a wick and a tail, followed by a flat topped bearish Heiken-Ashi candle. That would be a bearish Heiken-Ashi reversal. And it's the same thing with bullish Heiken-Ashi reversals. You would have a bearish trend with flat top candles followed by flat bottom candles reversing the trend back to the upside. All right, and there's more nuances to it. The candles need to be, if you've got tiny candles creating a reversal, you don't want to get into it too quickly if you've had huge candles coming down. But that makes sense. You don't want to have 1 or 2 little candles after you've had huge candles coming down. You're looking for big candles to the upside for a reversal. One thing to be aware of is the price of the stock on the chart. The stock chart is not going to be the exact accurate price when you get Heiken-Ashi candles because it's using 2 candles to produce your candlestick. So it'll look a little different, and you have to look at your platform to make sure that you've got the right price. But it's only going to be different by a few pennies most of the time. So you want to be sure to refer to your normal candlestick chart for that. All right, so there's more nuances we'll go through here. What we're going to do is we'll talk about these things and give you a little bit more detail on them. Obviously, you're going to be trading with relative strength. You're going to be trading with institutions in the trade before you take any of these. But this using Heiken-Ashi is what we want to use when we're looking to get into a trade. It's really the time to do that. So this is kind of a graphic of Heiken-Ashi candles here. Now these are bearish candles. You can see the flat top, then a wick and a tail, and a wick and a tail, and then another flat top. So this is actually a Heiken-Ashi. It's not actually a Heiken-Ashi reversal candle, a bearish reversal. It's a continuation of the downtrend. We had a downtrend which was interrupted by a couple of wicks and tails, followed by another flat top candle. So this is a continuation candle, a Heiken-Ashi continuation to the downside, and you can see them keep stacking candles bearish all the way down. And this is beginning of a Heiken-Ashi reversal to the upside. So you see we get red candles, now we're getting wicks and tails, green candles, wicks and tails, wicks and tails. Now we've got a flat bottom Heiken-Ashi candle right here. This is a Heiken-Ashi reversal to the bullish side, right there. And this is where you would enter the trade and ride it up until you stop getting these flat bottoms. Now, one thing to notice, you notice on the candlesticks, that the beginning of every candle starts in the middle of the previous candle. Always starts in the middle of the previous candle. Notice this one starts in the middle, this one starts in the middle, this one starts in the middle. Heiken-Ashi candles, that's how they're constructed. So they'll always start in the middle of the previous candle, but they're really nice to see for nice smooth, to identify nice smooth trends. And again, here's the Tesla setup that we talked about before. Here's the Tesla candlesticks. You can see the flat bottoms. Wick and a tail, flat bottom. This is where we get in. Flat bottoms all the way up, continuing flat bottoms. And then wick and a tail. Nice place to start to take profits right there. So that's what the Heiken-Ashi candles look like. This was Gilead. This was a Heiken-Ashi reversal we took long. This is a daily chart. This is Heiken-Ashi candles on a daily chart. You see how it's kind of moving sideways? And we had a wick and a tail right here, and then a flat bottom here. That's a Heiken-Ashi reversal. That's what we took the trade. GE, same thing. Very choppy stock. Notice the choppiness. But see, these are Heiken-Ashi candles. Wick and a tail, wick and a tail. Heiken-Ashi reversal right there, and then a continuation right here. And this is where we actually took profits on the next day on this one. So, and then there's a Heiken-Ashi reversal here. You can see this one as well. But I'm just trying to point some of these out. This was a Heiken-Ashi reversal on IBM. This was some of the technical analysis I go through on these trades. We had a Heiken-Ashi reversal here for a beautiful trend to the upside. Big pop in IBM here. And then it basically kind of compressed. We're getting just wicks and tails. Now we got on here, we got a Heiken-Ashi reversal to the upside, and it broke this trend line. This is an algo line that I draw in my charts. It broke through that line and broke out with a Heiken-Ashi reversal candle. That's the perfect entry for a long right there on that candlestick. Same thing here on Teva. This was a Heiken-Ashi reversal. This one 214. We took a nice trade on Teva, and right here, see this Heiken-Ashi reversal right here. We've got wicks and tails, bullish Heiken-Ashi reversal, and then flat bottoms all the way up. That's a nice little trend right there. All right, so I'm going to look at some live Heiken-Ashi charts here. So I'm going to drop these down for a minute. Let me just get my tight CC2000 chart up here. Hold on a second. Bring these over here so I can pop up some CC2000. I was just looking at Lulu. This is Lulu after hours. That's the earnings. You can see that they took a pretty good beating on earnings. All right, there's a big candlestick there. But I've got a few that I want to look at here. I'm going to look at the daily charts. This is fast. If you look at fast here, switch over to my Heiken-Ashi candles right here. All right, so this is a fast chart. And you see it's in a beautiful, this is a beautifully bullish stock. This is when I talk about this in the room, this is what you considered the context of the trade. This is a nice bullish trade. But what we're looking for here is we're looking for Heiken-Ashi reversal, which we found right here on a Heiken-Ashi reversal. Then we have another little wick and a tail and another Heiken-Ashi reversal right here. This is a continuation, a bullish continuation. So see how clearly you can see that and identify that as an excellent place for an entry right there. And if you go back and look, you can see there was another beautiful one right there for a move to the upside. So it really does clear up the ability to identify trends. This was, again, fast. Let me go to another one. Got a few that I want to look at. DoorDash. And I identified these yesterday. There was a Heiken-Ashi reversal on DoorDash yesterday. So if you looked at that yesterday, you say, okay, DoorDash looks good. I think I'll go long. And here's what you got today on DoorDash, even though the market was pretty crappy today. But you got a gap up on DoorDash, pull back, but it's still a nice bullish chart. And if you look at the Heiken-Ashi candles for DoorDash, this is a nice setup right here. Really a nice setup. We had another one right here. So you can see how they can identify your entry so clearly. SMCI. And this was a bearish one. Notice the wicks and tails here. Let's go to Heiken-Ashi candles. We were on them. Here we go with a wick and a tail and a flat bottom, a flat top. This is a bearish, another bearish. And then today we get a doji. So you would take profits in that SMCI today. It's I mean, let's be frank. This is not a stock you'd be trading short. You'd be looking to get a long entry to get into this. It's a super microcomputer. It's been up massively, but I just wanted to point out the bearish Heiken-Ashi candles. Here's one I spotted the other day. This is app. This was a beautiful one here. Nice Heiken-Ashi candle right there on the daily chart, and just keeps on going. It went up nicely. If I look at the regular chart on this, there's a daily chart. We had a nice smooth run up, put in a little doji today, but still a really nice setup. So that's why Heiken-Ashi can help you find these trades. It can help you find the best place to get in and the best place to get out. I'll throw a couple more up here just to see. ANET, Heiken-Ashi reversal yesterday, perfect. Booms right up again today. So that's what you look for. There's a lot of them like that. Let's look at iRobot. This is a bearish one. Obviously, you can see this is a bearish trade. Here's the bearish Heiken-Ashi reversal right here. Flat. See the flat top candles all the way down, Still getting flat top candles. Had one little wick here. Still short. Now you would get out right here, and now you could probably think about getting back in again right here as you get a Heiken-Ashi candle to the downside here. And this is an 8 exponential moving average right here, this white line. I use that. If it doesn't go above that, you can stay in the trade, and it just keeps on moving down. So that's a Heiken-Ashi candle for those for a short trade. Haven't had a lot of short ones lately. Netflix been beautiful. Again, nice Heiken-Ashi reversal right here for 3 candles. Another one here for 3 candles, and another one right here. You could just get in yesterday for another nice movement in Netflix. So I hope that points out a little bit as to how you can find these Heiken-Ashi candles and help you trading with these things, because they're really helpful to get into a trade. And if you use them on a 5-minute chart, you can do this exactly the same thing. So if I go to 5-minute on Heiken-Ashi candles, this is Netflix today. So you can see it was a short here and it was long this morning. So you wouldn't be trading it long today off the 5-minute chart, because first of all, it's bullish on the daily. So you're not really looking to go short. You're looking for an opportunity to go long, and it never really occurred. It never really occurred today. But if you look at Amazon, same thing. We had a little bit of bullishness here in Amazon right here. So these are what you can look for when you're looking for Heiken-Ashi candles during a day. Like if you're looking to get long, the stock's good on the daily chart, and you want to get long, watch the 5-minute chart. Watch for a Heiken-Ashi reversal off of like the VWAP or something. Here we were below the VWAP, so you wouldn't take it. So again, today was a very choppy day, a tough day to actually trade anything. If you look at ACN this morning, this had earnings, big huge drop in ACN, and it was just dropping all day. Nice Heiken-Ashi reversal here to the short side, another Heiken-Ashi reversal here to the short side. So you could have just could have ridden this thing down today off of earnings. It would have worked pretty nicely. So that's I won't spend all day on these things, but that's what Heiken-Ashi candles look like. That's what that's how you can use them to improve your trading, and I hope that helps you a little bit. We look at them all the time in the room to find out trades. We'll be looking for a trade. Let's take a look at the 5-minute chart and find our entry. Now I want to look at some recent examples of some of the trades we took off of the Compass system, so you can see the kind of trades that are going out on the alert service and what we take in the room and how they were structured, how we set up, how we found these. And this was workday. This was a 5-day trade for a 30% profit. I think it was one of the ones we had listed there. And again, we took it right here. You notice that the colors down here, you notice how we get some yellows and greens and yellows and blues. The blue and green is bullish, right? So what we actually took it right here. This arrow should be right here. And then it went to yellow here. So this told us that we didn't have as much multi-time frame momentum as we'd like, but the stock was still fairly bullish, and these are Heiken-Ashi candles here. But the current time frame had gone to blue. This tells me that there's momentum in the current time frame. There was momentum in the long-term trend and the money flow, so that's fine. We took it here actually, and we took it for 5 days and wrote it up and took profits out in here somewhere. Nice little trade. MDT. This was one we took right here. You notice we're waiting for the time frames. This was a daily chart, waiting for these things to go bullish. So this yellow is bearish, both green and blue are bullish. So we had to switch to all bullish right here. Everything else was green. This switched over to bullish. We took it here right off of this 15 EMA. This green line here is a 15 EMA of an EMA. It's actually a smooth EMA. And this This, we took this trade here and wrote it right up. It was a beautiful trade, 25% on a swing trade on that one. VKTX, another nice one. We were in for just 3 days. You can see everything was green. We got a little pop here, and we were happy to take that long right there, and just for 3 days, 30% profit. McDonald, this was an overnight trade. We get in on this one for $8.30. We get out the next morning for $11.30. Why did we take it? This shaded area here is what's called a dynamic compression zone that the compass system produces. So when the stock breaks out of the dynamic compression zone, like it did right here, we actually didn't catch it here. We caught it right here. Then we took it overnight because we were breaking out of it, and we got a beautiful pop in at 11:30, out in at 8:30, out at 11:30, 37% gain. This is also a signal that the compass system puts out. These are called pop signals or pop out of the box signals. They tell us when a compression is breaking. This is a compression break. This is another compression break. So those are very helpful to us to find these trades. This was Moderna. This is the daily chart of Moderna. Notice that we were coming down off the 15 EMA, the little red line here, and we popped down right here, and we took it right here. Everything was yellow and red, bearish. We took this for 33% profit in Moderna. You can see how easy it is to see whether the stock's bearish or bullish here. Amazon, another 32% profit. We just actually traded this intraday on this. When we got everything here going green, we had some still yellow in this trend, but that's because it had been choppy so much. So we assumed that this was going to pop, which it did, and we got a 32% profit on that move on Amazon. And this was JD.com. You might be familiar with that. This thing broke down. We took a 61% profit in this thing. As again, dynamic compression zone. You see this little shaded area here, breaking down. Bought it there, and actually took 61% that day. We didn't even have to hold that overnight. Dollar Tree, same thing. Daily chart breaking down here. What we waited for was compression. We can see the institutions are selling the heck out of Dollar Tree here. Not hard to see that they're selling this off like crazy. And this is where we got the breakdown right here. And we took this candle, and they took it overnight, took a 25% profit in Dollar Tree. And Datadog, same thing. It went from blue to yellow. Everything else was red and yellow. So that was bearish coming out of this dynamic compression zone here. Broke down from here. We took it right here. Took it overnight, 21% profit. Nice trade. And Crowd, another bullish one here. Again, you see everything here went to yellow to green. This was blue. This was blue. This went to green. We took it here, and we took a 20% profit in that. We had some shifting here, so we had to be very cautious when we had these colors changing back and forth. But everything else was staying bullish. And this was 32% profit in Amazon in 45 minutes. This is a 5-minute chart. Notice the 15 EMA, that becomes a support resistance level. We take the trade right here on this pop out of the box signal right here as the multi-time frame, current time frame, and the money flow were bullish. The trend was still neutral, or neutral to bearish, but that's because we had so much compression. But we took it off of this pop signal right here with everything else, enough of the stuff being green that we took it. So we knew the institutions are in here. We took 32% in 45 minutes on this. You can see it moved up nicely, flattens out, we take profits. ENPH, same kind of thing. So I just want you to see what these charts look like with the compass system. This is, I look at every one of these stocks on the compass system. We look to see if they're bullish or bearish. The compass system needs to confirm that they're bullish and bearish, and then we dive into all the other criteria. But this was a nice breakdown here. See the compression. We look for compression. Everything's bearish. Institutions are selling. Just because they're selling doesn't mean the price is going to drop right away, but it's likely going to drop. And we grabbed it right here and took 20% in an hour on ENPH. And this is an interesting one here. I like to show Verizon. This is one that was compressing on the 5 minutes. Verizon doesn't move a lot. We actually get into some in the money puts. When I always take in the money puts and calls. We took in the money puts, about a 70 delta, and they cost us 45 cents. So $450 for 10 of those. And we rode this down for an hour, and that 45 cents went to 67 cents an hour later. So we get in for 45, out for 67, 50% profit in an hour. And these are really nice ones to trade because the options are so tight, so cheap, that you can really do well on something like that. All right, so this was a SPY super system. I'll just show you briefly. This was bearish. We had the market internals bearish. We had the institutions selling it, you can see, and we had a pop out of the box symbol in it, and everything lined up. We took it right here, and we wrote it down to here, and then we get out. That's why I can't alert on these. They're much too quick. This was like 6 or 7 candles, and we're out of the trade. All right, and I won't go too many more of these. There's plenty of these, but you can see the same thing. Bearish. See, we went from blue to yellow. Bearish here. Everything else was already bearish on red and yellow. We get it right here as it breaks below the VWAP. See the VWAP right there, the pink line? That's the volume weighted average price. With a pop out of the box signal, we take it short here, and we write it down, and we get out here for a 20% profit in about an hour or so. All right, and this Tesla, I did want to show Tesla. This was a nice one for 30% profit. You can see our entry right here, and we wrote it down to the end of the day. In this case, in this particular case, we took it off of a dynamic compression break right at the end of the day. You see the pop out of the box signal. Everything was red. We knew the institutions were selling it. We decided to take it overnight. We took the puts. The stock fell from 120 to 112. Puts exploded up about $7. Really a nice trade for us right there in Tesla run overnight. All right, and we've already seen that. That's the Heiken-Ashi reversal setup on it. I do want to just show this one thing. This is QSR, and the reason I'm pointing this out is this is a daily chart. We noticed the daily chart was bullish here. Okay, see everything was bullish, green and blue, but I wanted to trade this intraday. So then I looked at the 5-minute chart, and the 5-minute chart on QSR was compressing. I'm looking for where I can get into this to trade it, because I know I love it on the daily chart. Everything here was blue and green, so I had all of the indicators telling me that institutions are in there buying. I'm waiting for this compression to break. I get a pop out of the box signal right here to the upside, and I take it long, and I just ride it right up, and then get out right up here. That's why this lined up, and I traded it. Okay, so this is just some miscellaneous stuff. We finished April with 19 wins in a row, followed by 10s in a win row in May. I think the highest we've ever done is 43 wins in a row, and the most losses we've had in the low is 3. So the room does really well. The alert service does really well, and I just kind of briefly wanted to show you the criteria we use to find these trades, so that if you become an alert member or in the room, you'll know exactly what we're looking for and how we were able to produce these really good results. And again, here's what we're using: straight calls, nothing esoteric here. I'm not doing any condors and butterflies. At least I don't call them out in the room. I trade butterflies, but I don't trade any condors. And these are the particular strategies that you would see if you were in the room or you were on the alert service. Okay, so that's where it is. We'll talk about the special offer here. I want to see if there's any questions. I don't see any questions. And there is a link, by the way, in the chat box for a link to the alert service and the alert trading room. So that would give you the ability to go in there and look at that link. So and these are the special offers. So what we have here is, if for the alert service, these are 50% off. These are really good prices. You can get a full year for $7.98. You saw the profits that we were making in the room. Full year for $7.98 or quarterly for $2.96. Really a really good deal. It comes with if you take the alert service, you do get 1 month live in my trading room. You don't have to pay for the trading room for a month. You would have to if you wanted to enter after that. It comes with a Discord chat and of course the text alerts, obviously. And then you get access to my videos, they call it Wise Way to Trade Options. There's about 25 videos that talk about how to find high probability trade setups, all about the compass indicators and how to use them, how to do credit spreads, how to use time spreads on over earnings. There's a basic options training, a video in there on learning about options. If you're not familiar with that, there's one on Heiken-Ashi candles that goes into a lot better detail and on how to use the Heiken-Ashi candles. So this is the alert service. This is the trading room. The trading room is $849 for a year. That's 50% off. You could try it for a month for $148. And again, that comes obviously with the room comes with the alert service. And that gives you 12 months of the alert service, of the trading room and the alert service. Plus you get the chat, and obviously you get the SMS alert. The text chat, Discord chat is pretty nice. We've got 2 additional professional traders in there that answer questions all day, post charts. They have audio, you can talk to them. It's really, really effective. And then the same videos we just talked about there. So those are the 2 offers. 50% off is really, really nice. And again, that's really a cheap price for the alerts that we talked about, because it's been producing some really nice profits. I have a question here. Can you get 5-minute VWAP on TOS? I thought only, no, Brian, the VWAP, you don't really want to use it on anything other than a minute or 5-minute chart. You don't want to use it on a daily chart. The VWAP, the volume weighted average price, is really important. And let me see if I can bring this thing up. All right, so this is a SPY. This is a 5-minute chart. This is the VWAP right here. All right, on the SPY, the pink line. It'll show up on the daily chart, but it's not useful, because the institutions are using the VWAP as basically an important level for getting in and getting out of trades. And this is it on TOS right here on 5 minutes. I always have it on here on 5 minutes. We take a look at MU. See, there it is right there. See how MU is trading above it most of the day. And then this afternoon, it pulled back down through it. So MU is a long. You certainly don't want to be long when it gets below the VWAP right here. You can see all the indicators. Notice when it broke below there, you see how everything went red and yellow. But that's the VWAP, and you don't want to use it on anything other than a 5-minute chart. It's just not it's not useful. I mean, the reason that indicators work, like the 200-day moving average and the 50-day moving average and the 100-day moving average and the VWAP, the reason they work is because the institutions use them. I mean, they're self-fulfilling prophecies. The institutions are using those. The institutions aren't using MACD crossovers. They're using these particular indicators, and they've got algos that are coded to find specific things that retail traders are doing and basically break their trades. And you may have noticed that. All right, Brian. Yeah. So you only use it on a 5-minute chart. They're very, very useful. It's very, very important. So again, those are the offers. That's the alert service, 50% off, $798. And again, we actually produced over $10,000 in profits in February in the room, and I think the alert service produced about 6,600. Excuse me. So this has been paying off well. But one of the things that I try to do in the room is emphasize learning how to trade. Learn how to find the highest probability trade setups so that you can do this yourself. And also, if you're on the alert service, if you understand the criteria that we're looking for, when you get a trade, you'll be able to see why we took the trade. I mean, it's really important to see why we take those trades. That really is. And again, the room itself, that gets you the alert service as well. $849. It's not much cheaper, much more expensive than the alert service itself. But this way, if you're in the room, you get the alert service. And in this particular case, if you can only get in the room 2 or 3 days a week or 1 day a week, it's still useful, because you're going to get a lot of information in the room that we talk about. And there's going to be some trades in the room that we take that we aren't able to alert on, that you would also be able to take advantage of. So those are the 2 specials offers. And again, if you have any questions, you can call Rory, put your name in the chat box or the question box, and he'll get back to you. So again, I want to thank everybody for coming to the webinar today. I hope the Heiken-Ashi information that we talked about was helpful to you. It surely it helped my trading a lot when I started including Heiken-Ashi in my trading. Just like it helped my trading a lot when I started with the Compass system. I started using that. So again, thanks everybody for being here. I appreciate it, and I hope everybody has a very profitable on Friday. Get a last day of the week coming up here, market at an all-time high. We'll see where we go in the morning. So everybody have a great night. Thank you very much.